Our business partner in life and in business that is silent some days is CRA. But when they're not silent, they're not silent. And if they decided to come and check out what you've been doing from an accounting perspective, if you have those mixed up, it's going to be way harder to have a good story.
This is Insight, scaling lessons from the street. In this series, we mastermind a set of topics plaguing women entrepreneurs on a mighty growth path, such as mindset, business modeling, sales, marketing, finance, and legal. Whether you're looking for world domination or to work less while being more profitable, you'll find learnings in here from women who know the journey and fight in the trenches every day. Inside is co-hosted by Andrea Henry, Megan O'Neill, Shelagh Cummins, Susan Diaz, and Wendy Brookhouse.
My name is Wendy Brookhouse, and I am one of the co-hosts of this podcast. I am a financial advisor. My company name is Blackstar Wealth Partners, and what I do is help ambitious entrepreneurs unleash their money power to find, grow, and keep their wealth. So surprise, surprise, this week I would like to talk about money. And I would like to talk about 3 things that you can do in your business to reduce financial stress. And one of the things I do know for sure is that financial stress and worry about money takes up a lot of space in our mind. So if we can reduce that, we'll be able to focus more on the things we really like to do and grow our businesses. So, are you guys ready? Are you ready? Okay.
Totally.
My first one is love your numbers. Okay, so I can't see everyone in the audience, but everyone should be raising their hands and telling me that they love their numbers. So I'm going to open this up a little bit because what I find in many cases because I've talked to hundreds of entrepreneurs about their money, and what I find is that they're not paying attention to the numbers. So have any of you been guilty of not paying attention to the numbers, and what made you change and how has it affected your life? Shelagh.
If I could just share a story, one of my very first coaches, I met her when I was in financial strife. And I remember, when I hired her, I said blatantly, I don't know how I'm going to pay you, but I will. But I know I need you, and we're going to need to figure this out. And the very first thing that she had me do was to do an audit of all of my numbers. And I did it with her on the phone because she'd given it to me a couple times to do, and I kept avoiding it. And I have to tell you, when we were doing the audit, I had tears streaming down my face. And I felt like I was going to be sick to my stomach because I had never taken the time to look at how much money was coming in and how much was going out and how much was owed. And there was a huge discrepancy. And every month I had been putting myself further and further simply because I didn't want to see it. And one of the things she coached me through was being able to look at the numbers with no judgment and no emotion. Being able to see that these numbers are just a number and they're a moment in time and they can change through different choices. And it took about 2 years to regulate after that and to sort of shift from dire straits to being okay. And I have slid back a couple times, and then I stop, reframe, go again, and try it again. And for me, I believe it's going to be, Megan can probably do some coaching on this, but I do think it's something that is a little bit of a tendency of mine to not want to see the numbers. But I force myself every Friday morning to go and itemize the money that's come in, to itemize the expenses that go out. I meet with my bookkeeper every single month. We file taxes once a quarter to make sure that I'm on top of it. And having that accountability has really helped. But the big thing, Wendy, has been to be able to look at these numbers with zero emotion. They just are. And you can either like them or not like them. It's irrelevant. They are just a number.
I love that, Shelagh, that you've removed the emotion from it. And I think that the more we do something, the more likely we are to be able to remove that. Whatever judgment, whatever past money mindset we have, Megan, I'm sure you've dealt with this a ton of times, that's affecting why or why not look at the money. So kudos, Shelagh, kudos.
Yeah, and I think Shelagh's bang on. I think there's a lot of judgment. I think there's a lot of shame. And I think that comes into looking at your numbers. You don't want to feel shame. For anybody who doesn't know me, I spend a lot of time looking at people's beliefs. And there are huge beliefs around money. There's a lot of attachment. There's a lot of family beliefs that are attached to it. I was just thinking as Shelagh was talking, I was thinking about your accounting dad, Shelagh, you know. One of the things that I have always admired about accountants when I have talked to them, and I've actually worked with a couple accountants on different things, is they do seem to see numbers as they are. There's an attachment, there's almost an enjoyment at looking at numbers, which I think we all want to come to.
Well, and, just to that point, my dad was an accountant and we had not been raised that debt was okay. And so as much as there was the judgment, I think it was the shame of, oh my God, I've created this amount of debt. How am I going to get out of it? That whole being able to just share it with someone all of a sudden just removed the shame. And then it just became a frustration and an irritation that I just had to fix.
That's awesome.
Well, I have been a lifelong optimist, which has served me really well sometimes. Not always, though. And so with numbers, I've told myself in the past, and still continue to do so on some level, oh, but I believe in abundance. And if I spend it this month, I'll make it again next month, right? And while that has been the case, I think there's a little bit of a blinders, right? Just, it's okay. I'll fill the hole later. I'll worry about it later. Even though you're looking at the numbers, you're not really acknowledging what it is that they mean. And so reviewing them regularly definitely helps. For me, a lot of it was not just looking at the top line, but so it's easy to look at revenue and think, oh, things are going really well, without looking at how much is going out and realizing that actually there's not enough of a gap between those two numbers, or the gap is too much in the other direction. But I think being realistic, and as Sheila was saying, really divorcing the emotion from it is something that I still work on. But the more that I look at it, the more that I review it, the easier it is.
I remember back when I first started and I had a fair amount of debt, I remember looking at my husband who works with me now and saying, you know what, we can go make more money. We have our health. Everything else is controllable by us. So it's about what we do and how we choose to go about getting that money that helps. I'd like to just tap in. I think you should also know your numbers personally as well. And you need to know what your business needs to be generating for you to have the life you want on a personal basis. So from that point of view, I think you should know that. And the other thing I think you should do, and this can cause a great deal of stress for some people, for some entrepreneurs, automate your pay. So that however you form you're taking it, whether it's salary, whether it's dividends, I don't care if it's cats, but make sure those cats are showing up on your doorstep on a regular, reliable basis, and that you've got control of that. Because here's what I see happening. I see people, okay, I need an extra 1,000, they pull it over. Oh, I need an extra 2,000. And so there's no structure to it, and there's no way to be planning, and then overspending personally can take care of all of that fairly quickly. Susan, do you have something that you want to share about this?
With Andrea a little bit in that I certainly
like a lot of cats.
A lot of cats and a lot of abundance. I'm like, if I put my head in the sand right now, the abundance will come, has certainly been my practice on a few occasions. But yes, I am sort of very aware of my numbers. I don't always love them because I think I don't like to look at them when they're bad, or let's define bad as when they're in the red, because I was raised in a family in which I was told all debt is bad debt, and there is no separating the emotion of personal debt from professional debt. And so that's certainly been a journey that I have learned to walk with more comfort the past year or so, which was that, listen, what am I doing this for? What comes out of this? And, understanding that $1 earned is not $1 in your pocket obviously comes early, but then understanding that $1 spent is not $5 in your pocket tomorrow as well, right? So I think just understanding all of that has taken a lot of learning, and I can certainly go much, much further than I'm doing right this minute. And as far as like the pay is concerned, if I must be honest, yes, on paper, I pay myself. I never take extra, but as part of the growth phase that I've been in, I've certainly put it back in without any I wouldn't put someone else's salary back in with as much ease, but I would put mine back in there. So yeah, not really doing fantastically on that front, Wendy.
Well, I agree with Susan because I pay myself a percentage of my revenue. So it can fluctuate, but I've just been through a massive growth and have hired 2 women. And so I've actually lowered how much I pay myself so that I can pay and accommodate them because they are critical to my growth. But I feel like I can't automate that because I want to be in full control of what's going out versus what's coming in. How do you automate it when you have a flexible income?
When you do it that way, I guess, because it seems to me what I like, although it's not completely automated, what you have is a system. And that system isn't based on what my personal bank account is today and what's due tomorrow. So, because that's what I'm seeing, right? So I like that it's a system. For me, all I do is I bank at two separate banks because I refuse to blend my personal and business banking. So every Friday I move money over. So I interact e-transfer to myself every Friday. So that way I know that everything's going to be covered, because the days I forget is the day the mortgage is due. So then that's bad. So I try not to make that as much as possible. Has anyone else struggled with that, or
I think
lessons, Megan?
Yeah, I think there's still a lot. And I know that I grew up in a family where they, literally at the dinner table, we would say, we're not good at math. That was sort of the, and that both my parents weren't excellent. And even till my mom died a couple of years ago, but she had a fixed income and she still didn't have a budget. And I remember being shocked that my mother didn't have a budget. And part of it is that she just kept saying, well, I'm not very good at numbers. And she would have men go in to negotiate mortgages with her. And there was this whole belief system about being good with numbers that I inherited. So I think that I literally would read books in school during math instead of paying attention. So I think I had a really bad mindset around numbers and being able to do it.
Amazing. My third thing, which is really super tactical, hopefully easy to do, is to separate your business and personal credit cards. And what I mean by that is you do not need to have a credit card that is solely in your business name. You could have two cards in your personal name, but chances are they're two different colors. One color becomes your personal credit card and one color becomes your business card. So my green one is my business one and my blue one is my personal one. And that way I know it's actually part of our language is, hey, is this a blue card or a green card today? Depending on what's happening, so that we can make sure that our accountant will continue to like us, will not yell at me, and will keep things separate, because it does matter and it does make things so much slicker all along the way. And in particular, if you ever had, our business partner in life and in business that is silent some days is CRA. But when they're not silent, they're not silent. And if they decided to come and check out what you've been doing from an accounting perspective, if you have those mixed up, it's going to be way harder to have a good story. So if it's only for them. And I've seen people, I had a couple in my office the other day, and we're going through all their numbers, getting them all structured and planned. And when we came to that one question, I made him go and get another credit card, because he just was putting them all on one. And I'm like, you can't be doing that anymore. It's not necessarily a cash flow issue. It was just a question of he didn't know what one to get or that kind of stuff. I'm like, just go get the cheapest one, do whatever, but get something.
Wendy, what are the things that you see people trying to write off that are just so not write-offs, but they've bought it with the excuse that it's okay, it's a business expense?
Oh my gosh, they're all over the place. I like to apply the standard. If it did not help me get business, then I won't do it. I believe in trying to stay on the right side of the line and not necessarily at the line. I like to be a couple steps back so that I can make sure. And the other thing to remember is that sometimes when as business owners, people go, well, that's a write-off, so why don't you just get that? And you're like, because I still need the cash to pay for it. So people sometimes forget those pieces, and you're only saving 13% or 12% depending on your tax bracket from a corporate perspective or personal, whatever, depending on how you structure it. So keep that in mind.
Yeah.
Yeah. My accountant years ago, because I was in the film industry, and so that was sort of, the CRA didn't know how to categorize that. So we could write off everything, like dog food, you name it, I could write it off. But when it came, we started to get greedy, my husband and I. She was like, you guys don't be a hog, don't be a pig. So I've always kept that in my mind.
If I can chime in, the problem comes as well. So even if CRA never audits you, if you're at all thinking of selling your business, making sure that personal and business spending are separate is really, really key. I've seen deals, be squashed because it seemed, when the person was looking to buy, it seemed like it's a really healthy business. And when you look at the actual books, so many personal expenses were going through the business that they essentially got frustrated and said, I'm not going to deduct for your, trips to your vacation home that you've said is for a retreat and all these other things. And it actually makes the deal not go through. It makes it that much more difficult to sell your business. So if that's on your horizon, absolutely necessary to keep it strict. Better just pay a little bit more in tax. You'll make it back in the value of the sale.
Yeah.
And I just have to add to that about staying on the right side. You made a comment about the CRA. They're going to find you. And if you're in the US, the IRS, they are going to find you. And it doesn't matter if you owe $500, $5,000, $50,000, $5 million. It's the same amount of pressure to get it paid in that moment. So save yourself the pain. And I'm just going to tell you, it is painful. I've been through it and it's traumatic, and they take no prisoners and they just get their money no matter what. And so having that process in place to be able to pay quarterly, don't even wait the full year, just pay quarterly. And if you overpay, you get a refund. Like it's pay the tax guy. He is a guarantee.
If you find yourself in a position where you owe a great deal of money, that's when you should talk to somebody as well, because there are maybe alternatives about how to finance things and something else. And I think that in many cases, from a mindset piece, we structure our debt, and depending on the type of debt, we've got it in little boxes. At the end of the day, it's all debt, and you want to get it done in the most cheapest and expeditious way possible. So keep that in mind and talk to somebody.
But also, if you owe the CRA, you can't get access to any other capitals. Banks will not lend you money to pay off the government. BDC will not lend money to pay off the government. So they are your first pay, and then you can get access to capital to pay the rest.
Yeah. And in terms of keeping your accounts separate, I think it's one of those things that for me, it sort of came organically a little bit early in the business, purely because I cannot deal with the separation of it later. It's just a system. It's like this way you have all of it, especially because in my life, in my business, I tend to use the credit card heavily and then pay back the full 100% on the due date. So for me, credit works in my favor. I want to be clear. So I do use those points for other things. All I had to do in that case was to link the systems on the back end, but it still keeps, the two accounts entirely separate because, why wouldn't you? It's simpler. You just take one statement out and you've got your expense history unless you're using a whole lot of cash.
I think it's a hole that we sometimes fall into as sole proprietors when we're first starting off. We don't know if it's going to be a go or not. I mean, just right from the get-go, just open a separate account, do what you got to do, keep everything separate. In particular, if you're dealing with, say, network marketing and all that type of stuff, I see the blend right away, but it's just keep it separate if you can from the get-go. I think that it's key that these three things, although it's easy for them to say, love your numbers. So what is something you can do is get your accounting up to date and look at your numbers. Start to analyze some of your programs. I did some work with a lady who ran a number of programs, and what we did is we went and analyzed each program, and we figured out once you added in travel time, business development time, and course creation time, there was one in particular that made no sense. So we cut it immediately. But if you don't know, you don't know. I'll give you an example, even when I have clients who have investment properties, and I had clients who had 4 investment properties, and by the very nature that they owned them personally, what happened was it all got reported in one lump sum on their tax returns. And I made them break it out and do profit and losses on each of those properties, and it turned out that one was sucking all the good money out of the other ones. So what we did is we made the recommendation that they sell that property and get back and then they would have more money on the other side. So again, breaking everything out, knowing your numbers. I love Sheila. I know it was traumatic, but it's such a necessary part. And I would think you'd say that you're better off now having gone through that exercise. And once you start something, it's a new habit, and it's just ingraining that into your day by day. And, whether you automate your pay or have a system for your pay, set something up and structure it for yourselves, because that will make all the difference. Because it could be stress in your personal finances or stress in your business versus finances. You need to have them working together. And that's part of the reason you are in business, is to fund your life. And I think we sometimes lose track of that. That is its purpose. It needs to make money so that you can buy groceries and do stuff with your kids and do stuff with all that stuff. So making sure that they're balanced out that way, and just to separate out the spending. And those are the three big things I want to talk about today, because I think they're so fundamental. And we can continue to build on this through different podcasts and things like that, but I think it's the fundamental thing, and it's a lot to do. So chunk it down and just get started.
Thank you for listening to Insight. If you enjoyed listening, do us a solid and leave us a review. It helps keep us motivated to put our time into producing episodes of value. Thank you.